Welcome back to Strongman Personal Finance, everybody. You know who I am. I love you guys. You're my heroes. And I got a special guest today. Can you please introduce yourself, bucko?
Hey, this is Mariusz, Skonieczny, the leader in I hate the mining stocks movement, gold mining stocks.
So I actually bought a gold mining stock. So I was
No.
watching this channel called where they're alpha status stocks. And they're basically a bunch of pump and dump losers. And they had this stock called Apollo Gold and Silver that they were pumping. And I was like, you know what? These clowns are probably going to pump this stock up real quick. So I was like, I'll take a gamble and I'll throw $500 into it and see what happens. And guess how much I made?
You lost $450.
Oh, yeah, I'm down like 60%. So
Yeah. Welcome to the world of gold mining.
So tell us a little bit about your background. I saw you wrote some books and stuff. What's going on with that?
Yeah. I wrote about 10 books on investing. So I have a finance degree. I graduated from IU, Indiana University, in 2003. I was a real estate appraiser for about 5, 6, 7 years, both on the residential and commercial. And then 2008, 2009 financial crisis, when that happened, I left the industry and kind of focused full time on investing in the market. I studied up to that point. I studied Warren Buffett, read every book on Warren Buffett, and I just kind of went with that philosophy. But I do focus on smaller companies using that philosophy.
Okay. And I saw you also do you have an accounting background, or did you just learn that when you were in college? So I saw you wrote a book.
Right. So when my original what do you call a major was accounting, and then just at the end I decided not to go accounting and just stick with finance. So yeah, I mean I had to take a lot of accounting classes.
Oof. You didn't finish accounting. That really hurts my feelings. I'm half tempted to kick you off the screen.
Yeah.
So I guess you're mostly an investor in smaller cap or micro cap stocks. Do you do any index funds, or are you just strictly smaller stocks?
I mean, I think index funds. Most people should invest in index funds. Because that's the very few money managers can beat the index. And I do microcap stocks for one reason only, is because of the lack of competition. Smart guys like you don't go there because you either invest in index funds or you focus on value fundamental investing in the big space. So I don't have to worry about you. I don't have to worry about hedge funds because hedge funds are too big to go there. And so there's little competition. But just because there's little competition doesn't mean it's guaranteed results, because 80 to 90% of the companies that are small are complete trash, and you should never ever touch them. So it's only those 10 to 20% that have potential. But when they are smaller, they still are not at the mature stage, right? So you look at them and you're like, the financials might look ugly, but they might have something that you can figure out. Okay, the financials for the future will look better, but still, there's a lot more risk associated with that area for sure.
So how do you find a company that you think is going to survive? Because that's one of my greatest challenges, and why I avoid really small and profitable companies. Is I look at them and I'm like, oh my God, they have a negative 100% profit margin, for example, or they're diluting like crazy. Like what do you look for in a very small company that indicates to you that they're potentially going to survive?
So the gross profit margin is like hugely important. Like I'm not going to touch a company that has a negative gross profit margin. I'm not trying to find the next tattoo chef. Like no, thank you. Gross profit margin is probably the most important thing at first, because I need to make sure. Well, first of all, I wanna have revenues that are quality revenues. Okay, so what are quality revenues? Recurring revenues, high profit margin revenues. Maybe not right away, but I need to have a proof that the margins are going to be better. I want to have revenues that the clients have some kind of switching costs, right? Tough to switch. I want to have revenues that maybe they have like some kind of product that's so much better than the competitors that I think they can steal the market share, and then there's going to be growth. But gross profit margin is number one, because if your gross profit margin is 10%, like Tattooed Chef, like how are you ever going to have a bottom line? Like you have zero chance. You're going to go bankrupt. I mean, Tattoo Chef is going to zero. There's like no hope there. So I want 50, 60, 70% profit margin, and then I would like companies that they don't necessarily have to be like super profitable, or I will take like unprofitability, especially when it's their choice to be unprofitable. But because here's, for example, I had this one company that has a software product that caters to retail locations. And they don't show much profitability because they're reinvesting everything into growth. But when COVID hit and their business almost got shut down, they cut expenses to the bone, and they showed the market, look, we can be profitable. Like if we want to be, we can be profitable because it is our choice that we are making that conscious effort. We're going to show low bottom line, but if we need to, we can scale it back. So I hope that kind of answers your question.
Yeah, I mean, it's still a tough market. I mean, I stay away from it, but I can see how it can be appealing to some people, because if you get it right, I mean, you can make a freaking fortune off of some of these stocks. I'm talking like penny stocks are where you basically 100x. You're not normally going to do that with a larger company.
No, and I've done that the last couple years. I've done that, and it's funny because it was mining stock. It wasn't gold mining stock, but it was related to mining, and I did make 100 times my money almost on it. Like 70,000 turned into like 7 million. So you're absolutely right. But you see, one other thing with these stocks is that you're going into like a war zone. Okay, that's like the mindset that you have to have. But you can have an informational advantage, because what good does it do me to have put a lot of work into Tesla? Like everybody knows about Tesla. There's hundreds of analysts covering Tesla. Who cares? Like my efforts are not going to get me anywhere. But with those smaller companies, there's no analysts covering them. The investors are very limited. There's nothing on them. I can call the management. I can a lot of times I call their customers. I call their board of directors. I call their former employees, because you're going to get all the dirt from former employees, like more dirt than you ever want to know, and you can get an informational advantage like this. And the effort that you put into this, if you do it right and you get a little bit of luck, you're right, you can make an absolute fortune. But it takes work. You can't just blindly listen to some alpha whatever on or Chris saying on freaking YouTube telling you to buy Zonetica, and then that freaking things implode 98% because he doesn't know why he's buying it. Like everything I'm buying, like I might not be right, okay, but at least I've put the work into it. Like I know everything about this company. I have the CEO's cell phone, in my phone. Like I've talked to them, and not just that, I talked to his former employees, I talked to their customers, and I'm like, I know why somebody's buying their product. There's a lot of work behind that. But still, even with that work, nothing's stopping me from being down 50% just because the market is bad, like it is right now.
Yeah. So how do you catch management's attention? Because I mean, I imagine if you have deep pockets, they're gonna listen to you. When you approach the management, are you like, hey, I have a significant sum of money that I want to invest, or do you just literally shoot them an email and say, hey, I'm interested in investing into your company? Like, how do you kind of approach that?
Yeah, so you'd be surprised that with these smaller companies, you can get management on the phone. Like with Apple, you have zero chance of getting the CEO on the phone, right?
I talked to him yesterday. What are you talking
yeah,
about?
there you go. No, with these smaller companies, you can get them on the phone, and especially like, I do have more bargaining power because I can say I have a YouTube channel, I have this many subscribers. I want to know about your company, so they'll respond. But even before that, they'll talk to you, and a lot of times that's important, and there's two sides to this, because every CEO should be a salesman, right? So be careful. Like they can tell you anything, they can sell you on the dream and all of that, but I want to hear that. I want to hear the dream. I want to hear that. But then it's my job to be like, is this dream realistic? And that's when it's important to talk to the customers or former employees or whatever, or maybe even other investors or directors, former directors, to see if it's even realistic, But they'll talk to you.
Yeah, that's pretty interesting. I mean, I guess it is the smartest way to approach it, because I've tried to research penny stocks before, because I see them on YouTube all the time, and I'm like, is this a scam or not? And there's one that I've heard about called ILIS, and it seems like a lot of YouTubers were pumping that stock. And I tried to find, financial statements, and I couldn't find anything on this company whatsoever. So do you have, besides contacting management, is there any kind of resource or like website that you use where you could potentially find something about the financials of these companies? Or is it literally just, I'm going to call the CEO or email the CEO and try to get it that way?
Well, it depends on where it trades. If it trades in Canada, like, I mean, in the US, we don't have what's called a venture exchange. We don't have it. I mean, we have OTC, and OTC is not an exchange. It's a quotation system. But OTC kind of can serve as a venture exchange, but really we don't have it. Venture exchange, you have Toronto Stock Exchange Venture or Canadian Stock Exchange. And a lot of the companies that trade on Toronto Stock Exchange or Canadian Stock Exchange, they also have a secondary symbol that trade on OTC. But if they are listed on the Canadian side, you have to use CEDAR. So CEDAR, SEDAR, it's kind of like Edgar in the US. And that's where the financials are.
So you're saying it's a little bit easier basically to research smaller Canadian companies than in the United States?
No, I wouldn't say it's easier, but if a company only is trading on OTC over the market, then they might have OTC has different qualifications. It's like the highest level of qualification, then the middle, and the pink sheet is the lowest. So the pink sheet, you might have no information, no financials, or some of them might be there, but they're not audited. At the highest level, it's fully audited. So you just I usually go with the ones that have the financials, but there's no rule. I mean, at the end of the day, I'm interested in the business. And when you talk about like penny stocks, so penny stocks in itself has a negative tone to it, right? And because the industry, well, first of all, 80 to 90% of them are trash, like complete trash. They just have dreams. They have next cancer. They're going to disrupt everything, including your wallet, right? I mean, they're just like, so there's a reason why the industry tells people don't go there, because most people shouldn't go there. But then there is like, I went through before COVID, I went through like 6,000 companies one by one on OTC, Canadian Stock Exchange, TSXV, NASDAQ, one by one. And you'd be surprised like how you can find these hugely quality companies that even you as an accountant, you'll be like, holy shit, they have an amazing business. Like, huge switching costs, great margins, like they're going somewhere. So they're out there, but you're not going to find them on YouTube. Like you got to go one by one. You're not going to really find them by searching stock screens. They're not, some of them are not very screenable, but if you go like one by one, you'd be like, oh man, this is interesting. This is interesting. And that's kind of like how I found the one that I talk about on my channel called Voxter, which I found before COVID. And I looked at it and they're like, oh, okay, we're improving, we're fixing the problems for real estate appraisers. And I used to be a real estate appraiser. And I looked at it and I'm like, before COVID, I was like, no freaking way. These dumbass appraisers who are 60 years old, they're going to change. Like, no freaking way. So I'm like, no, I'm not interested in it. And then when COVID hit, I went back to it and I was like, oh my God, they're going to have to change, because now COVID is going to make them change. They're going to have to like figure out how to use better technology. They're going to have to figure out how to do real estate appraisals without sending the appraiser there, so that he doesn't get sick and all that. And then I called the company and I talked to the CEO, and it turned out to be that the CEO already built $2 billion companies before, and he's building another one. And he told me within 2 hours the entire thesis, what he plans to do. And then long story short, the stock is like 10x since I looked at it. And so it was that one of the things, you look at it one by one, nobody knows about it. You figure out the story, and, you can have a chance of making that kind of money.
So what is your win rate? Like if you buy 10 of these stocks, how many do you think will actually give you some kind of return?
So right now, my win rate is very high on good businesses, like really, really high, 80%. But on the gold miners, it's freaking 99% complete failure.
Is that where you started originally, was gold miners? Or
yes, because here's how you start in these gold miners. You listen to a dumbass like Peter Schiff, okay? That's how you start. You listen to him and you're like, the Fed is printing money and creating inflation, and so you're going to protect yourself, buy gold and silver. And then you're like, whoa, why should I stop on gold and silver? I want to make some serious money because I'm so smart. I studied the Austrian School of Economics. I know the economy. I know they're printing money. I know gold is going to explode. How about I lever it up and I get myself some gold miners? And oh my God, you enter that space. You think Jeremy from Financial Education is a dumbass? Like, go and get yourself some gold miners, okay? Go and get yourself some gold miners. I tell people this. When they complain about, volatility in the market, their stock is up and down, I said, you know what? Go and fucking get some gold miners, invest in gold miners, go through the gold mining boot camp, and after you're done, if you come out alive, then nothing will ever touch you. No bear market will bother you. No volatility will ever bother you, because they will take any ounce of hope that you have left, they will strip it from you. That's
now,
how terrible
are those
this
gold
is.
miners, are they like, they think there's gold somewhere and they're going to dig, or a lot of them, we know there's gold and we've identified how much there is and we're going to extract it at this rate? Like, kind of how does the industry work? Is it more exploratory, or is it more like we're just going to try to dig up as much as we can?
So you have the side of the business where you have a couple of geologists, they get together and then they look at a property that's interesting, and they might raise some money to drill, to get some data and define a deposit. That's like defining a deposit. That's not gold mining. Gold mining is when you're actually trying to produce the metal. So then you have the big major mining companies like Barrick. I mean, they're safe because they have, they're safe relatively, but they have properties that are in production. The ones that are the riskiest are the ones that are trying to put something in production. So they have all these studies that says, we have 2 million ounces of gold in the ground. It's going to cost me $800 of cash costs per ounce of gold. Gold is trading at 2,000. Look at the difference. We're going to produce 100,000 ounces a year. Look at this cash flow. Buy the stock. Oh, man. These are the ones that you lose your shirt on.
That reminds me of Apollo Gold and Silver, because I actually did like a little bit of due diligence on the company, and I was like, okay, they're pre-revenue. They basically bought the rights to this like area in Nevada or Arizona or something. And they were like, we know there's silver out there. And, we need the money to, buy the equipment and get our guys out there to start digging it up. But I knew, I was like, yeah, this is the dumbest company I've ever. Holy crap. Somebody's being loud out there. I was like, this is the dumbest company I've ever seen in my life. But I was like, you know what? These little YouTube scammers are probably going to pump this stock up. So I'm going to take just a little risk and see what happens. And of course, nothing has happened.
Exactly. You see, one other thing about these companies is that they constantly need to look for capital. Okay. So that's why you see them on YouTube all the time. They contact me every day. Like, hey, can you interview my CEO on your YouTube channel? We'll pay you 10 grand. Like, do I look like a kamikaze to you? No.
Are they offering you $10,000?
Yes, $10,000 they're offering me just because they know. Because they know that I have why I hate the mining video series. So they know that if I put a stamp of approval on their piece of shit mining company, it's gonna do well. But I can't put my people or anybody who listens to me through that, because I know what's coming. you know. And
Yeah,
did you see the situation between AMC acquiring Highcroft Mining? AMC
I
movie.
heard about that. That was very, very weird.
Yeah, so that company used to be Allied Nevada, which went bankrupt. Of course, hello, it's mining. And so when they acquired that business, I made a video and I said, a mining horror movie coming to the theaters near you, because that's what's going to happen. Like the retail shareholders, they're using overpriced stock to buy a movie, to buy a gold mine. Like, I would rather buy a tattooed chef before I buy Highcroft Mining. Okay,
Are you
like
sure about
seriously.
that? Are you sure about it? But so the crazy thing about Apollo Gold and Silver, whatever it's called, is I was kind of like digging into that area of YouTube with the the penny stocks and scams, and I'm not even joking. There were about 10 or 15 different YouTubers, and they literally dropped the same video about this stock all at once at the same time. Like, it blew my mind. It was literally a coordinated, at least to me, it looked like a coordinated pump and dump. It scared the crap out of me. And I honestly can't believe that, these companies can get away with stuff like that.
Yeah, yeah. I mean, look, I'm not really calling the CEOs and telling that they are crooks. I no, I do think that a lot of these guys are honest, but the business is so difficult and so unpredictable. I mean, when they say the cost to produce an ounce is $800, people don't understand how it's arrived. Like that cost of production could easily be 3,000. Like, if they are just a little bit off on the grade of copper that they have in the ground, just a little bit, and it's complete disaster. Um, and it happens all the time. Like, the other day, this one company has a press release and it says, we have a rock movement event. I'm like, oh my goodness, I've seen everything, but I have never seen a rock movement event. And so, some wall collapses, kills a few people, and they have a rock movement. So then the production shuts down. Guess what? Now they have to raise money. The stock goes down 80%. They have to dilute. I mean, I could go on and on. That's why I created this, YouTube video series, because people were like, "Oh, I listened to Peter Schiff and he told me gold is great, and I would like to buy some gold miners." I'm like, guys, you have no idea what you're talking about. Like, listen to my video series, and maybe you will vaccinate your brain against gold miners.
So does Peter Schiff, because I got the impression that he wanted people to mostly invest in his mutual funds. He has these like really expensive mutual funds with Euro Pacific Capital, and he's got a gold mining fund in there. So is he also like basically encouraging people to buy any kind of gold miner, or do you think he's mostly focused on getting people into his mutual fund?
Anybody that talks about gold and silver will tell you, or most of them will tell you, that you should have some kind of allocation to the gold miners. I mean, those groups of people just go together. They're at the same conferences. Yeah, like, I mean, you're not gonna have somebody buying gold miners if they don't think gold is a good hedge against inflation. It just doesn't happen.
Yeah, it actually piss a lot of people off because, in my opinion, I think gold and silver is just a shiny rock. I mean, I know it has like utility. Obviously, I know that. But at the end of the day, it's a shiny rock. You're buying a rock. And you buy a rock today, you're going to have that rock 100 years from now. You're not going to have two rocks. It doesn't produce anything. So
Yeah, I mean,
I'm massively against any kind of
yeah,
metals or Bitcoin
yeah.
or stuff like that.
Well, and look at it right now. Everywhere in the news, you see inflation, right? Everybody's complaining. My girlfriend is complaining that groceries are going up and all that. And gold is supposedly should protect you against that. Like, so over many years, like when I was a child, gold, my grandpa had gold, and it probably maintained the purchasing power. Okay, I'll give it that. But if you want to protect yourself against inflation, the best way to do it is just buy good businesses that have pricing power, that can raise prices, that can be useful to society. I mean, if you're a doctor and groceries go up and we have 100% inflation, guess what? You're going to reprice whatever you charge, and you are going to get the value no matter how it's quoted to you, whether you make $1,000 per hour or $2,000 per hour, you're going to be okay. So just educate yourself. The same thing with you. You're an accountant. Like you have some kind of a bargaining power with the labor that you provide, because there's not that many out there. So just buy good businesses and have a good career.
Yeah, honestly, you can't go wrong. You're 100% right. I 100% agree with that. Because, like, yeah, I can, I'm gaining skills as an accountant, and eventually, no matter if we have 100% inflation, well, it's like, okay, somebody needs their taxes done no matter what.
Right.
So I'm going to
Right.
raise my tax fee by
Right.
100%. And then if
Right.
you invest in good businesses or just the index, I mean, you're basically buying all the businesses. Those businesses will raise prices as inflation increases. See, in the long run, you really can't lose.
But if you buy awful businesses, you will lose. Let's talk about the honest company, if we may. Right?
I saw you in the video. I didn't watch it.
Yeah, I went to the store. Okay, I went to the store, and like, look, I get the appeal. She's hot and everything, right? I get the appeal, and then even my girlfriend said, you know what? I would buy her stuff because of the the credibility and the good stuff that she wants to do. But here's the bottom line. You go to the store and you buy wipes or whatever. The competitor is right next door, Procter & Gamble. Procter & Gamble has 50% profit margin, the gross profit margin, and the honest company has like 30% or something like that. And now, so see what happens now. The costs are going up on everything, right? So they're going to get squeezed on the production costs, right? So their gross profit margin is going to get absolutely destroyed. It's already shitty, and it's going to go towards Tattooed Chef gross profit margins. And then they're selling their stuff wholesale to the Targets of the world. Guess what? The Target is not going to want to pay them a top price. The Target is going to squeeze them on the wholesale price. The production people are going to squeeze them on the production. The margins are going to come down. They're going to have to pay for everything else more. I mean, it's not going to work out very well for a company like this in an inflationary environment, because they don't have any pricing power. But if you look at another company like Moody's, for example, a credit rating agency, right? There's only two credit rating companies that can rate bonds and all that stuff. You have Moody's and you have Standard & Poor's. The third one doesn't even matter. It's a duopoly, okay? If inflation happens, guess what? They're going to raise prices. You don't want to pay those prices, you don't get your bonds rated. That's a business that is going to do well no matter what. That's the difference.
Yeah, another thing that terrifies me about Honest is, like, I got 2 kids, or I'm about to have 2 kids. When I go to the store, I'm trying to find the cheapest brand, because gas prices are going up, everything's more expensive. The last thing I'm going to do is indulge on freaking Honest baby wipes or Honest diapers when they're 20-30% more, which is what I've noticed roughly the prices are. So yeah, you're exactly right. A business like that is going to have a very tough time unless we can get inflation under control, which we'll see if that actually happens.
I mean, I think inflation will get better just because inflation, you have money printing, obviously, but then you have the supply chain disruptions and then labor shortages. Okay, I will say that over time the supply chain disruptions are going to get better. Labor shortages are going to get better. So I think we'll do okay. But still, those businesses are going to get squeezed for the reasons that you said. If oil price stays elevated for a long time, I mean, something has to give, and most people live paycheck to paycheck, so they're going to look for the cheapest solutions.
I mean, like, the last thing you want to do is, because I mean, obviously we lowered interest rates, we printed money. The last thing you want to do is buy companies that are unprofitable and don't have a moat right when the Federal Reserve is probably going to start raising interest rates. Because I mean, it always goes in cycles. The economy gets too hot, they raise interest rates. The economy craps the bed, they lower interest rates. A lot of these people that are buying Honest, I mean, they're buying it basically at the tail end of the bull market after it was already, pumped up by a bunch of YouTubers. So they're going to get freaking crushed, I think, with all these different, small cap companies with no pricing power. So I feel really bad for Jeremy's fans, but I tried to warn them and they wouldn't listen to me.
Yeah, it's not going to be pretty. I think, man, a Tattooed Chef, come on, look, 10% gross profit margin. You sell it to the store for $6. No, you sell it to the store for $3 because they have to have 100% markup, and then it costs you $2.70 to make it. You make 30 cents per little bowl. Like, really, you think it's a good business?
It was less. The last quarter, it was. So I've seen two numbers. I calculated 2% gross margin.
Yeah, I saw
on the
that
financial website. It was like 0.86, which
Yeah.
is god awful. I've never seen a gross margin that bad before. So
Yeah.
they have a lot of work ahead of them, or they'll just go out of business.
Look, they're gonna do exactly what the very good food company did. Like, they're gonna go to. I mean, it's gonna implode because look, what's the goal of the company? Any company, big or small. I mean, to eventually reach profitability. Okay, like if you don't reach profitability, who do you think? Up to a certain point, it's like, okay, if let's say you grow and you have high profit margins, and it's more beneficial to grow. Okay, the investors are going to be like, you know what? Forget about, we can forgive you, but at some point you got to be profitable. At some point, otherwise, who is going to cover the difference? And if you're looking at, if you're looking at a company like Tattooed Chef, 10% profit margins, they are on the bottom shelf of a freaking Martin that I went to. Bottom shelf. I couldn't even find it, and an employee had a hard time finding it.
Yeah, but in Vegas, they have like 20 SKUs, man. Didn't you see pictures of Jeremy? You know what I'm talking about?
Yeah. So, I mean, the thing is, like, my girlfriend always says, like, look, you go to these stores. I mean, these brands are like a revolving door. Like, they come and you have the Coke, you have, Pepsi, you have these strong brand names, and then everybody else is like a revolving door. So you're facing huge competition. Huge competition is not good for your profit margin. Okay, it's not. And if you have profit margins that are 10%, like, even if they had like 15 or 20%, that's not enough to even cover the SG&A. And people in the YouTube space, they love to talk about, multiple over revenue. Well, okay, not all revenue is created equal. If I have a company that has 80% profit margin versus your piece of shit that has 10% profit margins, guess what? My revenues are a lot higher quality revenues than yours. So my revenues deserve a higher multiple over revenues. Why? Because at some point, or maybe even now, high profit margin translates into higher bottom line. That's why those revenues deserve a higher valuation. Okay, and 10% profit margin revenues don't deserve that kind of valuation. Maybe they deserve to trade at 0.10% of revenues, not 10 times revenues. I don't care it's growing fast. Like, let's talk about Tesla a little bit here. The auto manufacturing business is one of the worst kind of businesses in the world. Why? Because they're capital intensive, and they don't have any recurring revenues. The production of their cars is, I mean, it's not a high profit margin business. If you look at Ford,
there's massive competition.
Right.
There's 1,000 different car companies.
If you look at Ford or General Motors, like, they are trading now at 50% of revenues, market cap, 50%. Okay, why? Because those revenues are shit revenues. Okay, they don't generate very good bottom line, and whatever operating cash flow that they generate, half of it goes to capex. So that's not a very high revenue. And now we have Tesla. Okay, we have trading at 20 times revenues, and people are, Kevin, you meet Kevin, your friend, was like, oh, they're gonna have 500 billion of revenues in 5 or 10 years. Okay, so what? Those revenues are gonna be shit revenues. Why? Because they're gonna have to produce cheaper cars, lower margin, right? Right now, just like you said, it's a luxury car manufacturer. Yeah, Ford also produces cars that are high margin. Okay, but they also produce cars that are low margin. So overall, the margins are shit. Tesla's margins are going to become shit over the next few years. So okay, let's say they make 500 billion of revenues. Like, those revenues are terrible, low margins. They're not repeat revenues, and now they're not growing as fast. So do you think Tesla is going to have at 20 times those shitty revenues multiple? No, they might trade at 1 times revenues, or maybe 2 times revenues. So you might get a valuation, a true value of maybe 800 billion or maybe $1 trillion. At that point, you're paying for it right now. It's insane.
Yeah, all the growth, the potential growth, is already priced into that stock. But in my opinion, I don't think it's going to be bigger than Toyota. The best case is that Tesla becomes the next Toyota. And what's Toyota's market cap? 260 billion, something like that. So you're looking at a massive, massive downside if you're buying Tesla now, which a lot of people are buying Tesla now because they saw the stock go up and that's why they bought it 100%. There's no other reason why. And you have all these people on YouTube pumping the stock, and it's just a disaster waiting to happen. But I tell my fans all the time, nothing's going to happen to Tesla until they miss earnings and miss revenue, because Tesla will always go back to that $1,000 mark because people are putting into their models 50% revenue growth. And if you do that, it makes total sense. I 100% can see why people think it. But what they're not understanding is Tesla's a luxury auto manufacturer and their market's not as big as they think it is. And if they have to cut prices or they have to make a cheaper car, like you said, their margins are going to turn to crap. So to me, it's just a waiting game. I try to warn people, but you've seen what's happened to all these other stocks, Netflix, Facebook, blah, 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 blah. But people just don't want to believe that the same thing could happen to Tesla. So
look at what happened with Netflix, Zoom, and even Amazon when the pandemic started, right? Buy Zoom because everybody's watching it. 2 weeks later, buy Zoom because everybody's using it. 3 weeks later, buy Zoom. Like, come on, how many times are you going to tell me that? It's like you're buying a house, right? I said it before. You're buying a house, okay, $100,000, but it has a pool in the back. Okay, I'll give you 110, but it has a pool in the back. You already told me that, but it has a pool in the back. Like, how many times do you want me to pay you $1 million for your house just because you told me it has a pool in the back 50 times, right? At some point, it's like, okay, I know people are watching Netflix. I know Zoom is there. I know people are buying on Amazon, but like at some point, it's like, how much are you paying for that growth, or how much are you paying for this? And now all of these companies are getting smoked, and they are below the pre-COVID levels, right?
Yeah, it's amazing to me how short-sighted even like institutions are, because what happened during the pandemic is we printed money, everybody got stimmy checks, child tax credits, generous unemployment benefits, and all the margins and revenue of these large companies like Apple, they exploded. Like Apple was up 33% in revenues in 1 year, and it's already a pretty mature company. And to me, it's like, it's common freaking sense. Everybody got freaking stimmy checks. They probably went and got a freaking iPad. So, of course, their revenue shot up. But what people do is they project that growth going forever into the future. So what I recommend is plug your numbers into a model, grow that revenue, and go look at what the revenue is going to be in 5 years based on that model. If that number is ridiculously high, there's something wrong with your assumptions. That's why I always use much lower assumptions. For like Apple, I use like 6% revenue growth, because there's no way Apple's going to grow at 33 freaking percent for the next 5 years. Same thing with Tesla. It's going to have more revenues than Apple in 5 years. Please.
Yeah. Don't forget, it's a technology company.
Oh, that's right. See, yeah, Elon's, if Tesla has hard or bad earnings, or he knows they're going to have bad earnings, he's going to do something. He's going to have like some kind of gimmick, or, he's going to promise something, because he's kind of a master at like pumping up his fans and keeping that stock price elevated with, dreams of future, wealth and expansion of Tesla. So I'm curious to actually see what he does if Tesla misses revenue. I'm sure he's got something brewing in the back of his mind. The robots.
You see, I'm kind of afraid to be telling people about the microcap space, especially the ones that are, in the Cathy Wood crowd, because man, if Meet Kevin were to discover microcap stocks, holy cow, his imagination would have no limits. And all of those companies have big imagination. Like, I'm telling you, every single one on these exchanges is solving some big disruptive thing, right? And that's what people on these exchanges are attracted to. And I always joke about this, is that people that go and invest in microcap stocks, they get high on pot and they're looking for gold. Because they love marijuana stocks, they love these pharma stocks, they love these disruptive testing COVID, these all kinds of things. And if you show them businesses that like have real revenues and real customers, they run away. They don't know what to do with them. They're like, can you give me a joint? And then I'll understand it. Like, seriously. So I'm kind of afraid, like, talking about these, because people that love Tesla, it's like, oh man, every other CEO, on these exchanges, like Elon Musk 20 years ago. And even Elon Musk, like, come on, he almost went bankrupt with Tesla. It's like, you know how many Elon Musks there are that we never hear about because they blow up?
Yeah, I mean, the whole fame of Tesla and the reason it's so big on YouTube is a couple guys got lucky with it and they got enormous returns. It's going to happen again at some point. We're going to go back. We're going to have a bear market. Then we're going to go back into a bull market. Somebody's going to buy, a speculative stock and put all their money into it and get lucky. And we're going to see these people sprout up again. It might take 2, 3, 4 years, but it's basically a cycle that's always going to repeat itself because there's always somebody out there that is going to buy a stock that 100 or 1,000 X's. It's just a matter of probability. So my goal on here is just to keep shitting on these people as much as I can.
Yeah, but look what happened. Look what happened though. I did an interview with one guy who, I guess some of his stocks didn't go the right way, right? Let me just be nice about it. And I asked him on the interview, I said, "How old are you?" And he said, "I'm 31. Like, okay. So I said, "So you were like 17 when the 2009 financial crisis happened?" Like, yeah. So I'm like, okay. You see, this is the thing, is that a lot of the guys that we see on YouTube, they never went through a downturn. They were wearing diapers when 2008, 2009 financial crisis happened. And then they experience this market that's just going up. And then by the dip is rewarded. And even though they might have started as fundamental investors, value investors, then they realize, you know what, that's not generating good returns for me. So why don't I crank up the risk a little bit? Why don't I do these growth stocks? Why don't I get into NFTs and cryptos? And then they go more and more and more. And then the storm comes. And then it wipes them out right now. And I think I listened to Jeremy's interview. I think he started off as a value investor.
He did.
And then he fell in love with Cathie Wood. And it's like, okay, if you go that route, like, I can understand that you want bigger returns because I did this myself. And that's how I got burned in the mining stocks. But that's the thing, you're fundamental, you're doing the research, and you're like, you get beaten and it's not excited. So then you're like, okay, Cathie Wood is, second Jesus, and then she also believes in Elon Musk. And then they jump on this wagon and they buy these crazy companies at crazy valuations. And now the storm comes, it wipes them out. And then they're like, oh, this is the worst sell-off ever. I can't believe this. We're going to turn around. Like, yeah, like you're not going to turn around on some of these things because they're going to go to zero. And that's what happens. If you build a house, I like to say it like this. Warren Buffett gave me the foundation, right? I can build a foundation and then I can build whatever house I want on it, but it has a foundation. Cathie Wood, her house is on sand. Okay. So now we have freaking storm coming and her house is just gone and it's never going to be rebuilt. Some house that has a foundation, okay, it's going to get beat up. Some of the windows are, maybe some of the roof is going to get beaten. But then hopefully, if the fundamentals are good and you're right on the thesis, on the asset, whatever, you're going to stand. Your house is going to be okay. Her house is gone. Done. Finished.
Well, the hardest thing is sticking to your guns as an investor. I mean, I've been buying, my total world index for the last 10, 11 years, ever since I started investing. And you look back over the last 10 years, tech stocks have crushed it. U.S. stocks have crushed international. And I've underperformed the total U.S. stock market by, not a massive amount, but I've underperformed it. But to me, it's like, okay, the more that U.S. stocks go up and the more rich and expensive they get, I think the greater the fall there's going to be at some point in the future. That's why I'm continuing to stick to a global portfolio. And I tell my fans that I'm like, hey, just because U.S. stocks did good doesn't mean they're going to do good forever. Same with Tesla, same with all these other freaking hype stocks. I mean, people used to bash me because I talked about index funds and I try to warn them like, hey, a lot of these stocks are freaking trash. And I'd make videos about these stocks like Unity, for example, and it just kept going up and up and up. But I was looking at the fundamentals and I said, this doesn't make sense, guys. Eventually, this is going to get freaking wrecked. And if you're just patient enough, you will be proven correct. So that's my number one advice to people is just, if you have a philosophy that works and makes sense, stick to it, ignore all the freaking clowns, ignore the hypesters. In the long run, you'll win. And like, look at Jeremy's returns next to mine. He's comparing my ETF to his trash stocks after they already dropped 40, 50%. Then he made a comparison and they've dropped 40 or 50% more. Whereas my ETF is down like what, 10, 15%? It's ridiculous. So
Yeah,
of
but like,
course, ladies and
okay,
gentlemen.
so if you think about those two companies that he talks about, Tattooed Chef and Honest Company, is there like a thesis behind it? In other words,
Mhm.
you know, the margins are going to get better. We're going to be this big, and when we're this big, the bottom line is going to be this much. That's what it's going to be worth. Like, I
Yeah,
mean,
his thesis is revenue growth and the financials will work themselves out. And
oh
it's the
wow,
future. That's literally, I mean, I could copy Jeremy's model easily. I find a cool futuristic sounding company. I see if it has high revenue growth, and that's it. That's all you have to do. That's all you have to do to be Jeremy because it worked for him before. He
yeah,
did that with Tesla, and Tesla exploded. And to his mind, it's like, well, I'm such a genius. I knew Tesla was going to work out, and it did. Therefore, I can do it again. And you can see the results, which is going to happen with a lot of these Tesla fanboys because they won on Tesla. Tesla eventually will crash. I know it will. But they'll say, hey, I can do this again. And they'll buy some other trash and profitable company that probably won't work out for them and go down 100%.
yeah. Wow. Okay, I don't even know what to say about this.
It's brutal. It's brutal. Just buy index funds. I mean, so my channel, I'm just like, hey, 5% of your portfolio, whatever you freaking want to do. And the rest should be in index funds. I mean, everybody's got a different investing philosophy, but if you're new to the market and you have no financial background, you're not buying individual stocks. You don't know what you're freaking doing. And most of these people have no idea what they're doing. So that's kind of my word of advice, especially if you see somebody like Alpha Status Stocks pumping Apollo Gold and Silver, which I got annihilated on, which I was like, I mean, I knew it was probably going to happen, but I was like, you know what? These clowns are going to pump this stock. I'll put
But
500.
wasn't he the same guy that was pumping Humble?
Maybe
Humble?
they were. They pumped like a bunch of penny stocks. Like they
Yeah.
pumped Ilus, Apollo Gold and Silver, and like a bunch of other freaking crap. There's so many like weird penny stocks that I don't even understand that well. But
I
if
mean,
you listen to
I think I was listening to them talking about Humble, and then he said, I made a video about it because I was like, this is amazing. He's like, if Humble executes the way Alibaba did in China, it's going to be worth 300 billion. I'm like, yeah, let's just execute like Alibaba, no problem. Let me put my own phone together and be like, if I just can have 1% market share of Apple, I'll be a billionaire. Like, let's do it.
yeah, I mean, like I said, like Jeremy said, the financials just work themselves out. All you got to do is put your little numbers in a model, and boom, there you go. That's all you got to do. But I mean, the majority of these stocks, like you said, are freaking scams. I mean, if you actually have a good process and you're winning, that's awesome because you can make a ton of money. And I wouldn't mind, like maybe if I have more time on my hands, I can eventually like delve into that field and potentially buy some of those stocks. But if you're an average person, you're working full time, you're not going to have time to like call the CEOs and
Yeah.
all that stuff. So it's a tough market, but if you're making money, I mean, I can't look down.
Right now, I do have to say I'm in a house of pain because everything is getting killed. And you see, this is where your conviction comes in, because okay, you have the fundamentals, something is happening behind, and then the stock is going the other direction. So then you're like, okay, was I right? Like this one particular one that I have, like, it's an asset play, and it's a copper asset, and it's like they're doing everything that they should be doing. Things are going in the right direction, yet the stock is going in the other direction, and then you have to sit and be like, did I make a mistake, or is this just a sell-off? And sometimes it's not obvious right away, but that's where your work and that's where your conviction comes into play. And I tell these people all the time, you can borrow my idea, but you cannot borrow my conviction. The conviction comes from doing your own work, and if you don't do your own work, you can never have conviction. And it's easy to have conviction if the stock is going up, but you don't you don't need it when everything is going well. You need conviction when the stock is going down.
Yeah, I mean, if you're an individual investor watching this and you bought a stock because it went up and then it crashed and then you sold it, don't ever buy an individual stock again unless you actually learn what you're doing. Because you're exactly right. People like their convictions going up. Oh my God, yeah, I'm going to hold this stock forever. And then the second it goes down, they freaking sell out of it. But if you actually understand the fundamentals and you actually believe in, where the company's going to be, and it makes sense, when the stock goes down, it shouldn't bother you in the slightest. And like, I have a pretty decent investment in Alibaba. That's like the 5% of my portfolio that's speculative. That stock's got freaking wrecked, like just annihilated. But I'm firmly convinced that company is going to be amazing in 5 or 10 years, or the stock price will be much, much higher. And it doesn't bother me that it's down. But
you know why you own it. That's the thing.
Exactly, 100%. And if you can't handle that, just buy a freaking index fund. It's not hard, ladies and gentlemen. But yeah, so that's I got to head out in a couple minutes. Got any more comments? You want to give a shout out to your channel before I kick you off?
Just take my impossible to pronounce name, type it into YouTube, find my channel, subscribe, and be careful out there.
Yeah, how do you pronounce your name?
Mariusz Skonieczny.
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 Yeah, there you go.
Is it a Czech name?
Polish.
There you go.
Yeah.
All right. Well, thanks for coming on, man. You have a wonderful night.
All right, cool. Thanks for having me.
Yep. Bye.